Hello, I'm David Frazier, aka the Market Monk, and this is our daily Market Monk show where we strive to tell you everything that you need to know, but nothing more, regarding factors and developments that are likely to affect your investment portfolio. So today on Monday, June 16th, there were no major changes in any of the major stock market indices around the globe. Specifically, all of the U.S. major stock market indices were up slightly today as compared to last Friday's close, while indices for European stocks were essentially unchanged today, and Japan's Nikkei 225 index was down slightly. Meanwhile, Brazil and India's major stock market indices were also down slightly today, while China's Shanghai Composite Index was up modestly. So no major changes in stock prices around the globe, at least in the major regions of the world and major economies, as well as major emerging economies. However, there were some very positive economic statistics issued today for the United States. And I guess a better way to put it would be the latest readings on economic statistics or economic variables that were released today were very positive. For example, the Federal Reserve Bank of New York announced this morning that its Empire Manufacturing Index, its index of manufacturing activity for the New York, New Jersey, and Connecticut area of the country, based on surveys of purchasing managers at those manufacturing companies, manufacturing activity looks as if it increased sharply for the second consecutive month in that region of the United States during June. So that's a very positive development. Meanwhile, the Federal Reserve announced this morning that industrial production at U.S. factories, mines, and utilities continued to trend higher during May, and that output at those mines, utilities, and factories accelerated sharply last month. So that's obviously a very positive development. And lastly, the National Association of Home Builders announced this morning that based on the number of persons that expressed an interest in buying a home over the past few weeks, and the expectations of U.S. home builders, which is largely based on those potential buying expectations, that its index for the housing market rose considerably during the first half of this month. Now, none of those readings on those economic variables surprises me at all. I mean, I told those of you who listen to and watch this show on a regular basis, I told you last week that I expected the readings on important economic statistics for the United States that are going to be released this week, that I expected those readings to show that the U.S. economy was continuing to improve. I've told you recently that not only has manufacturing activity improved for many months in a row here in the United States, and the housing market has showed signs of improvement recently, but I told you last week and over the past few weeks that my research indicates that those sectors of the economy are going to continue to improve during the months ahead, and that the pace of economic growth in the United States is going to accelerate during the second half of this year. But, and what I'm about to tell you let me just get right into it. I guess I was about to say interestingly, but it's actually not interesting at all to me. And that is the readings on all of the very important economic variables that I just mentioned, on manufacturing activity, on industrial production, and some statistics regarding the housing market. The reading on all of those variables were better than Wall Street economists, on average, had projected. Now, I don't know why these guys are so bad at what they do. I mean, if all that I did every day of the week was review and analyze economic statistics, and that's what the Wall Street economists do. That's overwhelmingly what they do. You know, I'd have to drink heavily every morning. I'd have to drink alcohol heavily throughout the day, every day, to be as bad as they are. I mean, they just, there's no use in paying attention to those folks. I mean, obviously, this is on average. Obviously, you know, I'm not talking about, you know, obviously there are exceptions. But as a group, these guys are just very bad at what they do. And that's why I don't pay any attention to what they say. I mean, I recall back in mid to late 2007 and really into early 2008, Wall Street economists, on average, had said repeatedly that the economy here in the United States was in good shape and that the pace of economic growth they expected to continue to rise during the first quarter and the first half of 2008. Those same economists, and I guess really not necessarily economists, but the Wall Street strategists, financial market strategists, whose decisions are based somewhat on the analysis and projections of the economists at those firms. Wall Street strategists expected stock prices to continue to move higher during the fourth quarter of 2007, and many, and actually most of those strategists said that, hey, stocks were going to continue to move higher during 2008. Got all of that wrong, didn't they? They got it wrong big time. And unfortunately, those of you that listened indirectly or directly to those so-called experts, you know, you suffered some big declines in your stock market holdings during 2008. Now, not surprisingly again, what happened in early 2009? These same folks then were saying that the economy was going to remain weak and continue to worsen, and that they were advising stock market investors to be defensive with their stock market allocations, that is, to hold so-called defensive stocks such as consumer staple stocks, stocks of companies operating in the utilities industry, or utilities sector, I guess I should say. You know, they were very, very cautious. You had to be very, very careful. Well, quite the contrary. I told people during, I can't recall exactly, I have the dates recorded because I have it all documented, but in late February of 2009, early March, within about 10 days that the major stock market indices here in the United States bottomed, I told people in numerous articles that I wrote during that period that my research indicated that the U.S. economy was going to bottom out by the June of 2009, I'm sorry, and the stock prices were headed higher, and people should, financial market investments should be getting fully invested in cyclical stocks. Now, I'm not saying this to pat myself on the back. I'm really not. Hey, we all make mistakes. I mean, for example, I told subscribers to our financial market newsletters here at Frazier and Mayer Research LLC, doing business as themarketmonk.com. I told subscribers to our newsletters during mid-2013, from around May of last year to the end of November, actually the first couple of weeks of, or the first week at least of December, to allocate a large portion of their financial market assets to cash. And boy, we missed out on some, those people who followed me missed out on some big gains in the stock market last year. So I bring that up to balance this out, not and to give you evidence or indication that I'm not trying to just pat myself on the back and claim that I'm always right. I'm not. But I've tended for, well, about 15 years now. I can tell you I've gotten this right a lot more often than I've gotten it wrong. That is the direction of the economy, not only here in the U.S., but in several other economies around the globe, as well as the direction of stock prices in general, as measured by the major stock market indices. And I'm bringing that up once again, not to say that, not to suggest that I'm, superb at getting all this right, but to try to get you to stop listening to these so-called experts at these major Wall Street investment, money management and brokerage firms, because the most of those guys, they just aren't good at what they do. All they have impressive educational credentials. Well, who gives a damn about their educational credentials? I would never hire a money manager because of his or her educational credentials. I want to see their track record and their performance of their either their recommendations or the funds that they manage. Okay, enough about that. Let's move on. So we've gone over, or I've gone over what occurred in stock markets around the globe, today versus last Friday's close. No major changes. Stocks were pretty much unchanged. That is the major market indices. Stocks on average got some very positive economic announcements regarding the U.S. economy. There were not any major announcements regarding economic developments in any other major region of the world today. No major announcements out of China, Brazil, India, Europe, or Japan today. Now, regarding the latest readings on short-term stock market indicators, statistics that are take into consideration the price changes, the volume of trading, statistics such as the New York Stock Exchange cumulative advanced decline line, the Chicago Board Options Exchange volatility index, those and the percentage of stocks that have closed above their 200-day moving average. Each of those short-term stock market indicators were essentially unchanged today. Meanwhile, price momentum statistics for the U.S. stock market indices are now about halfway in between overbought and oversold levels. So that doesn't really help us out any. Meaning that we can't forecast accurately where stocks here in the U.S. are likely to head over the next few days based on that. So really no indication here on the short-term stock market trading indicators for the United States. However, price momentum statistics for Brazil, India, and China indicate that stock prices in general, stocks of companies that are headquartered or do most of their business in these countries are at overbought levels, and that Brazil, Chinese, and Indian stocks in general are probably due for a modest pullback this week. So probably due for a modest pullback in Brazil, China, India stocks, and yet the short-term indicators really aren't helping us here for U.S. and European stocks. But that's okay, because more importantly, we're going to get several other very important economic statistics, the latest readings on some very important economic statistics for the United States, released tomorrow, Wednesday, and again Thursday. And in my opinion, based on my extensive research, I expect the readings on each of those economic statistics, which I'll mention here in a moment, to also catch Wall Street experts by surprise and to be better than what those so-called experts are expecting. For example, the number of homes that were constructed during May, as well as building permits that were issued to construct homes this month here in the United States, will be released tomorrow on Tuesday, June 17th. And my research indicates that more homes were constructed during May than Wall Street economists on average are estimating, and that building permits to construct homes this month were higher than what Wall Street economists were estimating. If I turn out to be correct, I think stocks are probably going to rise again tomorrow, more so than they did today, but not by not substantially. And the reason being is on Wednesday of this week, the Federal Reserve's Open Market Committee, that is the committee that determines monetary policy and the level of at least short-term interest rates here in the United States, are scheduled to release their statement on their most recent meeting regarding their policy decisions at this time and over the next couple of months. And so my experience suggests that even if housing starts and building permits were up more than what Wall Street economists are estimating for May and June respectively, that is for housing starts and building permits for housing starts, I don't think we're going to see stocks rise substantially tomorrow in the U.S. because most financial market participants will likely be waiting until Wednesday to see what the Federal Reserve's latest decisions are regarding monetary policy. Having said that, I expect the Fed to say what it has said repeatedly over the past several months, and that is that it plans to maintain lending rates here in the United States, that is at least short-term lending rates, at very low levels for many months yet into the future. Secondly, I expect the Fed to say on Wednesday that they're going to continue to reduce their purchases of U.S. government securities and mortgage-backed securities, but that even though they're going to continue to reduce them, that's what I'm expecting them to say, they're going to emphasize that, however, they plan to maintain lending rates at very low levels. And if I turn out to be correct on that, if we take that into consideration, and housing starts were up considerably last month, and more than Wall Street economists are projecting, then I think we're probably going to see stocks prices in general here in the United States and probably in most other regions of the world rarely rally fairly sharply on Wednesday afternoon. And then, if I'm correct in my forecast for this coming Thursday regarding the Federal Reserve Bank of Philadelphia's manufacturing index for manufacturing activity during the first half of June for that area of the United States, if I'm correct in my forecast regarding that statistic, which happens to be that my research indicates that manufacturing activity in the Philadelphia area rose considerably over the past several weeks, increased, I guess you could say, manufacturing activity increased over the past several weeks. It's my forecast, and in my opinion, my research indicates that economic activity in the manufacturing sector in the Philadelphia area of the United States rose higher than what Wall Street economists are expecting. Hope you haven't gotten mixed up there. So housing starts, statistics on housing starts and building permits for housing starts are due out tomorrow on Tuesday, June 17th. The Fed's latest interest rate decision and monetary policy statement is due out on Wednesday, June 18th, and the Philadelphia Fed's manufacturing index is due out on Thursday this week, and I expect the readings on all of those statistics to be positive and to show that the U.S. economy is continuing to improve and that the pace of economic growth here in the United States will likely increase during the second half of this year. So I guess that's all that I have to say for today. Tomorrow I'll do as I do every day. I'll go over the the changes in the major stock market indices around the globe and important news announcements tomorrow afternoon, and the factual news, not the noise and all of the nonsense that doesn't matter, but only the real news, that is the real facts. And then on tomorrow evening, as with our new programming schedule, as I'll now be doing every Tuesday evening, I'll get a little bit deeper into recent economic developments in other regions of the world. So I thank you for listening, and I'll speak with you again tomorrow.